Hello everybody, and once again welcome to Cinenomics. Last night was an action-packed day on the Wall Street. So I'll give you a quick update on that. The good news is that the Nasdaq continued its run, which looked like it had stalled the day before yesterday. And three stocks actually, Apple, Netflix and Meta, thus Facebook, they actually hit their 52-week high. There were some challenges for another AI player, I think C3.AI, the one that I covered yesterday. They announced their Q4 results, and that was in fact pretty good. They had 72.4 million or revenue versus 71 million expected, and their earning per share was around 13 cents loss, negative 13 cents versus market expectation of 17 cents negative. So that was pretty good. What market did not like was their next year full year forecast. This year they actually closed at 267 million revenue and on a fantastic gross margin, 77% whopping gross margin. But their loss was also much lower than what it was expected. So around $46 million loss versus 70 million expected. So pretty good. But for the next year, FY24, they have actually forecasted not a very good, I would say very conservative numbers. So now they are saying that revenue will be around 295 to 320 range. That's something around 15 to 20%, which is not bad. But from the margin perspective, that will also be good, 75-76% gross margin. But from the earning per share perspective, or for the total profitability perspective, they are still forecasting that their loss will be around $50 to $75 million. Market did not like that, and the stock has tumbled. In fact, it was at one time it was down 15-16%, and finally it closed at around 5%, 8% down. So the good news is that these are the only three players: Palantir and the C3.AI, and of course the market leader Nvidia. So after Nvidia, market is expecting all these companies to at least give a good picture of future, and not this kind of a murky scenario. And that's why the stock was dropped. Another report was from the HP, Hewlett-Packard Enterprise, and HP Inc. Both of them had not done very well from the market expectation perspective. From the HPQ, which is HP Inc., Hewlett-Packard company, they actually reported something like $12.9 billion revenue, which was 22% decline from last year. So year over year growth is negative 22%, which of course market didn't like it. So that clearly shows that the PC market is shrinking. And for the PC component, it's negative 29%. And from their printing and supply side, it's negative 5%. So that's not bad, but clearly PC demand is slowing down. On the other hand, HPE, Hewlett-Packard Enterprise, they actually announced their Q2 revenue at around 6.95 to be precise, $6.95 billion versus market expectation of 7.31. Their earning per share was at 52 cents, which is a little bit on the higher side of the expectation, which was around 48 to 53 cents. So both these companies have actually missed their target. The good news is that HPE is showing some 4% growth in the revenue as compared to HPQ. So that's a good thing. Having said that, one of the challenge HPE is facing is to establish themselves as a cloud player. Even though they are calling themselves an edge to cloud company, market is not taking HPE as a cloud player, as a hyperscaler. They don't put them along with Microsoft, AWS, or Google. Having said that, their cloud business is very small. The HPE hybrid cloud Green Lake business is very small, and HPE does not actually announce separately what is their cloud revenue. Market doesn't like that as well. But the good news is that from the AI perspective, out of this $7 billion, HPC, high performance computing and AI, is around 840 million. So around 12% of the total revenue comes from AI and AI related infrastructure. So that's a good thing about it. Anyway, the market dumped both the stocks day before yesterday, and that actually pulled down Nasdaq. But good news is that yesterday it has regained its journey, I would call it, and overall the market was pretty high. So Dow was almost 153 points higher, and Nasdaq was around 165. Again, little bit of positivity has come from the approval of this debt ceiling, right? So as I mentioned yesterday, House of Representatives have actually voted for it. 314 members voted for versus 117 against it. So now it will go to the Senate, and now everybody has seen the details about it, and looks like the market is showing a little bit of happiness around it. Having said that, dollar index has actually come down. So I'll cover a little bit in details later about what dollar index is all about and how it impacts the overall economy and the commodity prices, etc. Because European unions have said that their situation is not looking good, and they'll continue to increase the interest rate. And that means the EU currency has gone up and dollar came down. At the same time, the manufacturing data in the US came a little bit not as expected, not very good. And that actually impacted the dollar index, which has come down from its 8-week high of 104 to around 103 something. What's the impact of that? The impact of that will be on the crude. Its impact will be on the commodity prices. So crude is pretty much, Brent crude is hovering at around 73, 74. And we will see today that what will be the metal prices in the London Metal Exchange. I'm expecting that will go down as well. With that, I'd like to thank you all for your continued support. Please don't forget to like, share, and subscribe, and hit the bell icon. And before I go, I'll leave this question with you. Everybody on the Wall Street, among the analyst community, is talking about, is this AI boom similar to the dot-com bubble or the cryptocurrency boom? Think about it. Give your comments in the comment section, and I'll cover that a little bit in details in my next subsequent episodes. With that, thank you very much for watching. Have a beautiful day.